Hello guys, welcome back to my channel. This is Soji and you're welcome to Soji Forex. To all our new subscribers, I want to say thank you for subscribing to our channel. And I want to indulge you to please go through all the previous videos on this channel. It will serve as a foundation to you because we always make reference to what has been established in those previous videos, and I also want to encourage you to watch each video more than once, okay, for you to have maximum use of everything that is stated. It is advisable and commendable that you watch each of those videos more than once. Alright, so thank you and welcome back. So in today's video we want to look at how we take a high probability trade, and this is going to be part 2. In the previous video we have established the two types of candlesticks that we'll be looking out for in taking the trade, and we said we'll be looking at the pin bar and also the engulfing candle. Okay, so if you haven't watched the previous video, so please endeavor to go through the video where we've already established the basis of what we are about to do now. So without wasting much time, you will need this indicator that you are seeing on my chart now. Is very important, and the indicator is Bollinger Band. The period is 130, deviation is 2, the shift is 0, apply to high, the style is 2 pixels, the color is green. You can choose any color of your choice. So the advantage of this indicator is that it helps us to do a quick analysis of the market. And what does it mean? It always shows us that whenever price is at the upper band of the indicator, is at an exhaustion level, and there is a high tendency of price reversal back into the band from the upper band. And whenever price moves from the upper band, it moves towards the direction of the middle band. Okay, and when price get to the middle band, it has to make a decision of either a continuation to the upside or to the downside. Okay, and whenever price moves back to the middle band, there is a tendency for the price to move back. Another thing is the band helps us to establish the trend. If you are not a good market analysis, you can use this band to do your analysis. A good market analysis I'm talking about is you don't know how to make use of the structural analysis, which has to do with the higher high and a higher low for an uptrend, then a lower high and a lower low for the downtrend. If you are having a challenge in that regards, or the use of your trend line, you can actually take advantage of this. And how do you know the trend? Whenever you see the market above the middle Bollinger Band, it is established that you are in an uptrend. And whenever price is below the middle Bollinger Band, it is established that you are in a downtrend. Okay, and you can see a typical example of what I am saying here. I have price return. Okay, good. Here, let's take it from this place. We have a price at this upper band, and now price will turn, break the band, come in down here, and you see that the price keep on remaining at this lower band and it keeps going down. But if you are a structural trader, you will know that at this particular point is our first high, and then from there we have another low being established, and then we have our lower high. Okay, let's go this way. Our high, our low, our lower high, right? Lower low, lower high, lower high, and then a lower low in this region. So the price continue in that direction. But today basically what we want to look at is how we will take our high probability trade. How to take high probability trade using the engulfing candle and the pin bar pattern. Remember, we are not using these candlesticks in isolation. Neither are we using the Bollinger Band in isolation. Now, what do I mean by using in isolation? What I'm trying to say is you don't just see a pin bar anywhere in the market and place a trade. Neither will you just see an engulfing candle and just jump into it for a trade. We won't be doing that. Okay, you can't just find this pin bar and jump and say, let me buy. That is trading in isolation. Or because you spotted an engulfing candle, you just dive in and say, oh, let me make an entry. No, there are conditions, and here are the conditions. Number one, if you are a price action trader, number one condition, mark out your support and resistance. You mark out your support and resistance zone, your point of failure and point of reaction. You mark your support and resistance, that is number one. Then number two, mark out your trend line. Okay, I am saying this in reference to every price action trader. Mark out your support and resistance. Mark out your trend line. Okay, this is a trend line. Example of a trend line. Mark out your trend line, which is also your channel. Mark it out. If you are a price action trader, mark out your point of support and your point of resistance on the 4-hour and daily time frame. 4 hours and daily time frame. Mark out your support and resistance level on the 4 hours and daily time frame. Okay, point of failure and point of reaction. You will mark it out. Then if you are a smart money trader, all you need to do is mark out your order blocks. Mark out your order blocks. Okay, mark out your order blocks, which are your point of interest. Mark them out. Mark out your order block. Mark out your smart money cube. Mark out your imbalance. Are you getting it? One, mark out your order blocks. establish the trend of the market, mark out your order blocks. That is one. Mark out your smart money cube if there is any found in the structural direction of the market. Then number three, mark out your fair value gap. Mark out your fair value gap, which are the improper price action that you have identified in the course of the analysis. You mark them out. Then number three is you can also use your Fibonacci level, so that you can identify your premium and your discount zone and wash out in those regions. So those are the conditions. Now, having established that, you will now begin to look for a pattern formation at this level that you have marked out. You are looking for a pattern formation at the level that you have marked out. And what am I trying to say? Let's say, for instance, I marked out this zone as my resistance level. Okay, let's assume this is my point of resistance. I have marked it out. Having marked out this point of resistance, and it has been established that this is my point of resistance, what next do I do? This is a 4-hour time frame. I will move to my 1-hour time frame. Let's look for the point that we have marked out. Good. Now here is the point where we have marked out as our resistance level. Now, to me, you have marked it out as your resistance level as a price action trader. Now, as a smart money trader, here is my point of analysis. I will see this level now. I will see from here, this top here, to this level. I will treat this candle that go into this resistance as a liquidity sweep of this top. So which means the point that you have marked out as a price action trader support and resistance zone has become me a smart money trader. It has become my point of interest as well. Why? Because there is a liquidity sweep of this zone. That is number one. Now what do I do as a price action trader? I will wait for the price to return back into this zone, right, for me to make an entry. And then you see price returning to this zone. Now what do I look for in this zone? First, remember the zone you marked out for you to take an entry for this reversal. Remember, this is a reversal trade, not a continuation. Any trade from outside the upper Bollinger Band and the lower Bollinger Band is a reversal trade, not a continuation trade. Now I wait for this market to return back into this zone. It is my point of interest. It is also a point of resistance. It's also a liquidity zone. And then you begin to look for a pin bar candlestick or an engulfing candlestick. Okay, looking at this particular candle, this is a pin bar, and if you would have made your entry at the close of this candle here, your stop loss would have been up here, right? But nevertheless, it would have played you a little, but eventually went in your direction. Secondly, if you are looking for a bearish engulfing candle, this particular candle here that we are seeing gives you a confirmation, and on the close of this, you make your entry here. You would have made your entry here at the close of this candle, and your stop loss is above the candle, and the price would have eventually go in your favor, right? Then while you are waiting for this period, and what does it mean? It simply means that for you to have this entry, you must have a double top or a double bottom. And what double top are we talking about? This is our first double top from the upper band. This is our second first double top from the upper band. This is the second double top. So which means that in that your zone, you must have a two touch. So you won't make entry on the first top. Remember, even as a smart money trader, I've identified the price as a liquidity zone. So I know that price have to go back to mitigate. So I will wait for price to return back into that place. And as a price action trader, I will trade it as a double top. And at the same time, I will trade it as a resistance zone. Good. And that is the confirmation. And while you are waiting for that, you can also use your trend line as a price action trader. This is your trend line to trade while you wait. And as a smart money trader, I also trade this as a higher low, lower low, higher low, lower low, higher low, lower low, higher low, and a lower low. So I will always trade this as my structural level. Being a smart money trader, as the case may be, a lower high, and then what do? I will mark out each of my order block. Okay, just as I've established before, I will mark out each of my order block, right? This is a structural level. I will mark out my order block because this is a downtrend. Here is another one. And I'll be waiting for price to come into these zones, right? Remember I said you will mark out your fair value gap. Can you see it? Price returning to it, tested it, right? And I also said you will mark out your smart money cube. We have a smart money cube there. And now, as a price action trader, having drawn my trend line, you wait for price to return to your trend line and give you a candlestick pattern. And what candlestick pattern do we see? Look at it here. A bearish engulfing candle. Because you know that your trend line is an area of resistance. And then you can see the price give you a bearish candle, it went back down. It came here again, gave you another candlestick pattern, it went back down. Look at here, it came here again and gave you a pin bar. This particular candle, a pin bar, and went in your favor until we get another break of structure here, which is a change of character. And immediately we got this, we know that something is about to happen. We know that this price is only going to form a double top and be coming down, because it's going to our area of resistance, it's going to our area of liquidity, where we know that there is a price hanging there before it will come down. So this is how to take a high probability trade. And at the same time, you can figure out each of these zones using your Fibonacci level. You can see how powerful it is. You now see that price came down here, returned to 78.5% of the Fibonacci. It went back down. You feel the next level, and then look at it. We went back again, 78.5, gave you another candlestick pattern, went all the way down. Let's go. You feel the next level, and then price returned as well to 61.8, and then it went down. So it always begins from that direction of the upper band. So while you wait for the double top or the double bottom to form in that region, I actually believe that this is making sense, and I want to believe that you are getting value from what we are sharing. Now, looking at this as well as a price, as a smart money trader, I will see this double bottom here as area of liquidity. And I assume this price that came down has taken liquidity from this zone, right? And at the same time, as a price action trader, I'm going to see here, I am going to see this point as my first bottom, and I'm going to see this as my second bottom, because most of the time the bottoms must not be at the same level. This is an improper W pattern. So I will take advantage of this. This is the first leg formation, so I am waiting for the second leg, provided I know it's towards the lower Bollinger Band. And then it gave me a bullish engulfing candle. And when I get this engulfing candle, I make my entry here. My stop loss is below the candle. And you can see how far it takes me. It takes me back into that resistance zone to mitigate the previous trade, and I am on my way down. Now, and at the same point, please follow me carefully, and in that same order, as a smart money trader, I know there is a liquidity here. This is a double bottom. Stop loss are hanging here because someone will trade here first and trade here the second time. But this candle moved down to sweep liquidity. So as a smart money trader, I knew what has happened in this region. So I know that price will definitely go up and return back to mitigate this candle of my that took away the liquidity. So I have bought back using my double bottom from here up here, and then I sold again from this particular resistance level down. And while I am coming, I am mindful of what is hanging here. So when price came back, knowing that there is this liquidity swing, here again I got another confirmation with this rejection that it has mitigated and we are going up. And then you see that we went up for a while, right? And in that same vein, remembering where I am coming from here, I can as well establish my price action using my trend line while I wait. So this thing is simple and it is straightforward. Mark your support and resistance from your issue, from your 4 hours, your daily time frame, or your structural point, as the case may be. Come back to your H1 or your M15, your M30, depending on your time frame of entry, and then for a reversal, you are waiting for price to form either a double top from the upper band or a double bottom from the lower band. Okay, we are trading reversal in this video. In the next video, we shall be trading trend continuation using this pattern. You can see this is the first top, this is the second touch, this is first and 2. Okay, it must be a double, so it means that for your long-term trade, you are not taking any entry, even on a lower time frame, without spotting these two signs. And you are looking for a candlestick pattern, the pimba or your engulfing candle. So you have a lay down rules now that will guide you all through your trade. You can see from here, this is the first rejection. Now look at this second rejection and where this rejection is happening. Right, we have it. Here is your first rejection. Now this is the second rejection. You can see that it is a pin bar. So first top, this is the first leg. On your second leg, you get a confirmation and you are on your way. This could have been your first leg, or this close. So this can be your first leg. Here is your second leg, and then you get the pattern. Your stop loss is above and you are good to go. Here is your first leg, This is your first leg. So you will wait for the second leg formation. So the price will always return. It doesn't matter how long, but we are sure it returns, and then you are on your way down. Here you can see from the lower band, this is your first leg. Try to make rejection, but went up, came back. This is your second leg. It gives you an engulfing candlestick pattern, and you are up. So this method is simple. You can go to your 15-minute time frame and find this. Okay, we are coming from the upper band. First of touch, second engulf, you are down. Stop loss. Your stop loss should be 10 to 15 pips above the candlestick formation. Stop loss 10 to 15 pips above or below the formation of the candlestick, and then you are on your way to the downside. So please go through this video. This is part 1. In the subsequent video, we will be doing a review of this particular strategy, then on how to take a reversal trade. Please, I believe you have gained something from this video, and so please do not forget to press on the like button, like the video, share the video, and above all, subscribe to the channel. Turn on the notification bell so you'll be the first to get notified whenever we publish our next video. So thank you for watching, and see you in the subsequent video.